Well, it's time to do business again on Business Incorporated, 55 minutes around the world of business. I'm Minnie John Mekwa, and for this episode, here's what we have prepared for you. The Biodogu platform of customs in Nigeria. Well, the launch is still on, adoption is still growing. Zambia has new notes, banknotes and coins. We'll tell you more about that. And in Ghana, mobile money transactions hit 649.2 billion Ghanaian cedis in early 2025. Welcome to the program. I'm Amy John Mekwa. We start from the global space as usual, telling you that oil prices dipped slightly on Tuesday as worries about the impact of the trade war on global growth outweighs concerns about a hit to supply from threats by U.S. President Donald Trump to impose secondary tariff on Russian crude and a bomb in Iran. The Brent we see for this afternoon lost 10 cents, that's 0.1% to $74.67 a barrel. Also down for WTI at $71.37 a barrel. And we know that slower global growth would dent fuel demand and increase prices on the global space. Tariffs on buyers of oil from Russia, that secondary tariff is also still in the pipeline. The world's second largest oil exporter, that's what Russia is. And of course, it could disrupt global supply and hurt Moscow's biggest customers, which are China and India. Still in the global space, we look at metals now, and gold prices hit record peak on Tuesday as concerns that United States President Donald Trump's reciprocal tariffs might fuel inflationary pressures and impede economic growth, and that drove safe haven demand. Look at the numbers for this time. Spot gold was up 0.6%, $3,142.83 per ounce after hitting an all-time high of $3,145.38 earlier. U.S. gold is also up 0.7%, $3,171.80 per ounce. Silver is over on the flip side, $34.13 after it dropped 0.2%. Platinum is unchanged at this time. Palladium is up 0.8% at $990.34 per ounce. In the previous session, bullion recorded its strongest quarter since 1986, marking one of the most significant upswings in the precious metals history. President Trump, who sees tariff as a way of protecting the domestic economy from unfair global competition, that's what he calls it, has promised to unveil a massive tariff plan tomorrow, Wednesday, and so we'll see. We're already seeing reactions to that reciprocal tariff, which is supposed to begin April the 2nd. And then we come to Africa, begin with Mali, Burkina Faso, and Niger's military leaders. They have imposed a 0.5% tariff on imports from Economic Community of West African States, that's ECOWAS. Well, this follows their exit from ECOWAS to form the Alliance of Sahel States, AES, that's what they call it, reshaping regional trade dynamics. Analysts say that the move is likely to have negative impact that could threaten about 234 billion naira in Nigerian exports. Nigeria has been a key trading partner for Niger, with exports such as petroleum, gas, electricity, and cement totaling $491.4 million over the last 4 years. It's a tariff world we're having these days, led by President Donald Trump. The federal government has challenged youth in the country to make themselves readily available and make positive use of youth-oriented initiatives and programs, which is aimed at developing their innate and God-given talents for the development of the country. The Minister of Communications and Digital Economy, Mr. Bosun Tijani, made this call in Abeokuta, the Ogun State capital, while commissioning a Community Information and Communication Center donated by the National Information Technology Development Agency.
and resources in creating 1 million technology jobs. For anybody that is following the development in the world today, you will see that there's no world without technology. And there's a strong shortage in technology workforce all over the world. A lot of the developed countries have aging population, and they're not giving birth to kids. But in Nigeria, the average age is 16.9. Our young people are being projected to becoming the workforce of the future, not only for Nigeria. So that's why the president has decided we're going to put resources into exposing them to technology so that they can get meaningful jobs. They can look after themselves, but their family as well, but also contribute to the country. This center you're seeing here is one of many. In the next 2 months, we're launching about 30 of them. This one, we're not just going to put it here as a center. You can come back here in a couple of months and see what's going to be happening here. This center will be properly animated. We'll put resources into ensuring that there are courses for young people to come and take here. But not just courses, we'll also ensure that there's job opportunities that we can connect them to.
The Securities and Exchange Commission says it expects that the Investments and Securities Act 2025, which was recently signed into law by President Bola Tinubu over the weekend, will boost the environment for digital assets such as cryptocurrencies, which have now become a well-preferred investment option. The Director General of the SEC, Dr. Emomotimi Agama, made this known on Business Morning earlier today, where he commended the assent of the new investment law, which now introduces critical reforms to promote integrity, transparency, and sustainable growth in the nation's capital markets.
One of the greatest challenge of our exit from the FATF grey list is the non-availability of a regulation or a law that specifically speaks to the regulation of crypto assets or digital assets. And that has been provided, which is a green light towards our exit from the grey list. And with that, of course, what will come with it is the influx of foreign investors into the Nigerian market. Besides, it is also going to provide some level of clarity and confidence to investors who intend to play in that space. And that is very, very critical for the growth of the Nigerian capital market, providing avenues and other asset classes that will excite Nigerians, particularly the youths in Nigeria, and making sure that Nigeria becomes a place of reckon in terms of the regulation of crypto assets, digital assets, and all other innovative products that will bring succor to Nigerians in wealth distribution.
Also on the radar is the attempt by the federal government to ensure that port activities are smooth and without a lot of cumbersomeness, which has been recorded before now. Well, that is the essence of the Biodogu platform by the Nigeria Customs Service. A stakeholder was a guest on Business Morning earlier today, and he says this is the right way to go, even though he expresses some concerns.
Before, everything is done by paper type, go to this place, go to this place. No. Now, at the comfort of home, now if you want to import now, I want to have a full container load, just log in. A corporate company can input their team number and also operate before you import anything, both from both PAL, everything had any document relating to what you want to import. You're expected to send it there on that platform. It's more easier. So what I'm trying to say is this platform is designed to solve our local problems. They understand. Probably a custom man is at the head of the affair, so he understands our problem. That's why I was so happy about it. If you have designed to make sure that we have seamless processing, clearing our goods, there's other impediments like the trucking from Papa Port to various terminals. There's a lot of challenges there. You know, before there was this e-column that was introduced. We are still having hinges on that e-column. I want the customs authority to investigate. We pay so much money just to allow our truck inside there. The platform is being abused, and I want the customs to really help the stakeholders on this very matter. Other challenges, let them look at, because if it's a chain, if one sector is working, another sector is not working, it will affect the whole process. And the essence of this platform will be defeated. So I just want them to look at it. We are having serious issue. And also issue of the network failure. I pray that with this platform, the issue of network failure will be a thing of the past.
Now, let's do some business from the corporate side. And even though the markets are well closed at this time, we're seeing results. For instance, I think the most recent one is that of Wema Bank. We saw Wema Bank deliver a strong financial performance in at least 5 years, reporting a remarkable surge in both gross earnings and profitability. The audited financial statement for the year reveals the gross earnings jumped to 433.43 billion naira, driven, according to them, by robust income and strategic asset expansion. Profit before tax also went up by 141% to 102.5 billion naira. As part of the report, the board of directors proposed a 1 naira dividend per share for investors. Well, they say most of their money was made by giving out loans and investing in government securities. Other than this, over time, we've also told you about, for instance, we had Fidelity Bank yesterday. Also, we see that their profit before tax also up 210.0%, 385 to 385.2 billion naira. The gross earnings also went up 87.7%. Profit after tax was up 179.6%. And dividend was 2 naira 10 kobo per share. We've also had Zenith Bank. Zenith Bank, we did see that, of course, theirs was also positive. We saw audited finance for the year, a double-digit year-on-year growth of 86% in gross earnings from 2.13 trillion to 3.97 trillion. It was driven by 138% increase in interest income, supported by investment in high-yield government securities. Profit before tax went up 67% to 1.3 trillion naira from 796 billion in 2023. Net income went up by 135 from 736 billion in 2023 to 1.7 trillion in 2024. So it does seem like mostly the banks, you know, we had talked about, we didn't see the results from the banks, even though we had seen those from a lot of consumer goods and other corporates that are listed. But so now we see the banks are now sending it in. Let's find out what this result will tell us about the health of the financial sector in Nigeria. And we're doing this with the Chief Executive Officer of Star Advisory Limited, Mr. Kevin Ekulafo, joins us from our Abuja studio. Mr. Ekulafo, good afternoon and welcome to the program. Happy holidays to you.
Happy holidays, Ini. Thank you for having me.
Great. So when we see this, I mean, impressive numbers, most of the banks, we see their assets grow close to 100%, more than 100%. Gross earnings also up, a lot of them up to 100%. Are we in a safe place? And we know that the bank's recap is remaining just about 12 months. Would you say the banks are good? Business is going on as usual. We see Wema Bank is very emphatic with the fact that they have made their profits through loans that they give out. So would you say, looking at the workings and the numbers around the banks, we are in a very good place at this time?
Thank you for that question, Ini. I would say that about a year ago, I was here in your station, and I remember dissecting what the likely outlook for the recapitalization process would be. Now we're 1 year into that, and about a year more to go. I would say that looking at how it has shaped up, a few things have worked out for the big tier 1 banks. They have been able to invest in technology. As you well know, sometime in December last year, you know, a number of banks transitioned from one core technology to the other, and we had challenges with payments on some of their platforms. All this is possible because of the investment that is now made possible due to the initial capital that was raised by those banks. But I wouldn't say that it's uhuru yet. There is need for more capital for the banks. Also, the regulatory environment right now, where CRR is at 50% as a result of the MPC taking a decision to jack up the CRR to sort of cool down the inflation in the economy, is having an adverse impact on the banks and making it difficult for them to be able to meet the needs of their customers who require some credit facilities to grow their business. I'm aware of Access Bank has gone to the capital market to raise commercial paper, 193 billion. I'm aware there are 3 other banks also already either have sought the approvals of SEC or are in the process of doing that to also access the capital market. And this is at the very same time that you have so many other banks trying to raise, whether you call it private placements or having their existing shareholders invest in rights issues, or even going for IPOs, outright IPOs, or looking for strategic investors. So the capital market is really, really crowded right now. There are so many deals, and it's good for the capital market, it's good for the economy, but I would say that the banks are definitely struggling. The treasuries of those banks are struggling to be able to meet up with the capital requirements of their customers right now.
So you mentioned the CRR at 50%. Explain to us how that is putting pressure on the banks.
Okay, so banks, basically their job is the intermediation. That is, you move money from the surplus side of the economy to the deficit side of the economy. So those who deposit money, who want to have that money sometime down the line to use for their personal needs, the bank takes that money and lends to those who want to do business. Now, by keeping CRR at 50%, means half of all the deposits of all these commercial banks and merchant banks, for the commercial banks who are 50%, cannot be used for anything. It's kept with the central bank. It's basically sterilized. Now, that means the banks have only 50% of their deposits to do business with. Now, the pressure that causes is that cheap funds, which would have been used for lending, is taken out of their reach because the CBN is trying to cool the inflation. And now banks are now forced to say, okay, I have exhausted what I have. I am under pressure to meet my customers' needs. I don't want my customers to leave me and look for other banks to deal with. So I am now forced to go to the capital market to get expensive funds in the form of CPs, commercial papers, maybe 90-day, 180-day, or 270-day commercial papers for short-term working capital for me to on-lend to my customers. So that's exactly what's happening now. So it increases the cost of capital for banks.
Yeah, but doesn't the high interest rates give a buffer?
High interest rates, yes, you make more money in terms of high interest rates for the banks, but there's still a challenge. If you have high interest rates, you are declaring these beautiful results you see, but there's a challenge that you could lose your customers as well. And you don't want to do that as a business. You always want to increase your customer base. And for you to do that, you need the resources to be able to lend to them. Now, when you do not have that money because half of your deposit is sterilized because of inflation targeting, you are now forced to look for alternative sources of capital to lend to those customers. There's also a negative side to this. So if you raise a CP, for example, you are raising at maybe 24%, and the bank still needs to make money on top of that. So at the end of the day, the final lending that goes to the customer, the cost of lending to the customer, would shoot maybe 36, 37, 40%. Currently, that's what some of the banks are doing. And you know that that is damaging to our economy. It's difficult for any SME I know, or any even the big businesses, to cope with a range of 37–40% interest rates right now.
So if, assuming we can create a scenario, we know that inflation is high in the country, which is why the CBN says it is determined to tame that inflation. Assuming that CRR is now reduced, could you create a scenario of how it will feed into the real sector or the real economy and the impact it might have, you know, when you compare that, because there's a price for everything anyways in life. So when you compare that to the issue of inflation, you know, what picture can we see?
So I think if you are reducing CRR, the CBN isn't unaware of the fact that a massive release of funds by these banks could also drive up inflation. But I'd also say that, you know, if we do not do this, we also stand a chance where the cost of lending will balloon beyond the reach of customers. As I well know in my business, I know a number of clients that have shrunk away from going to banks for lending right now because the current range of 36, 37, 40% interest rate regime is difficult for businesses to be able to do what they do and make money and repay those loans. As it is, even the NPLs are gradually inching up. So we need to find a careful balance. And I know that in the last 2 months, from January and February, the inflation has been inching downwards slightly. It's somewhere around 23% right now. So I would expect that by the time the numbers for March comes out, you would find that it most likely has also inched slightly downwards. Now, at some point in Q2, we would be expecting that the MPC will start looking at how to reduce either the CRR or something to make sure that the rates start coming down, the lending rates start coming down. MPR needs to start, coming down. Even if it doesn't happen in April, we expect that sometime maybe in May or June we should, get the MPC decision, and we hope that it will start inching downwards because of the impact on businesses. And you know, the president is looking for a $1 trillion economy. That's not going to happen if the cost of funds is quite high for businesses.
So now we see the results from full year 2024. Fast forward to the end of 2025. How do you see this result? What numbers do you think we'll be talking about by this time next year?
So I believe that for most of the banks, it's going to be a much better picture. They will mobilize more deposits. They are going to be more tech savvy because now they have a lot of funds to be able to invest in platforms, in software. They, in the last maybe 5 years, were pushed out of the fintech space by the big fintechs who were raising a lot of funding from VCs and all that. Now there's going to be a heavy pushback by these banks. So I expect the fintechs should brace up. They're going to have some of their market share eaten up by some of these banks who are going to be investing heavily on their tech platforms. So definitely, for those who have holding companies, some of those fintech platforms they own are going to be making a lot more money. So I expect these numbers to improve significantly in a year, because even in that 1 year from now, some of them are still going to go to do further raising. You know, Access Bank, First Bank is trying to do private placements. You know, I know many of them are still looking to come back to the market to raise additional capital, you know, and that is going to make them much stronger, both in Nigeria and on the continent. You know, I can see there are plans for a number of them to even spread wider, even beyond Africa. So that is going to make them more robust. and make them stronger and make it unlikely for some of them to fail. For the tier 2 banks, maybe one or two of them might eventually enter into tier 1 status. The likes of Fidelity and FCMB are looking likely that anytime from now they would be joining the tier 1 banks and the tier 1 status. For the tier 2 or tier 3 banks, we hear there's a merger between Providus and Unity on the books. We expect that will be concluded by then, and that unified entity will be much stronger, knowing that Unity is a bank that is well represented in the northern part of Nigeria. So under a merged entity to be stronger, So you look at some of the other smaller banks, the banks that just came on board, even the merchant banks and all that, a lot of them are going to be stronger. And I expect the numbers that will be seen would be more. The only challenge I see, of course, with AI and some of the technology we are having on board is that there might be loss of jobs because banks would deploy a lot of technology now that they have the funds. And that might not go well for some people. So I would also put it out there that anybody out there who works in a bank should go and get more training and retraining to make sure that they can retain their jobs.
Yes, and you talked about the fintechs. I hear it's more of collaboration now between the traditional banks and the fintechs. It's not a lot of competition. So I guess we'll be seeing new trends by then, and also by this time next year we'll be talking about the recap coming to an end. So there are so many things that would define the banking sector by the end of the year and early next year. Yes.
Yeah. I must put some context to that. Even though I said the banks are going to push back, it's a competition. Even though there's still some partnerships, they can't do without each other because the fintechs also keep their monies with the banks. So it's a partnership. But I would also say that there are a number of those fintechs that have become mature now, the likes of Flutterwave, the likes of Paystack, the likes of MoneyPoint and Kuda. I wouldn't be surprised if we hear tomorrow that MoneyPoint is acquiring one of the tier 3 or tier 2 banks, or there's a merger between Kuda and some other bank. As you can see, some of these nascent banks are already poaching some of the top eggheads you have in some of those big banks. Not too long ago, the CFO of Stanbic Bank joined one of them. So that tells you a lot, and that tells you the strength of some of these
Those that you
fintechs.
Thought were the small boys are taking over, but it's obviously going to be very interesting. Yeah, it's going to be very interesting.
Yes,
that space
it's going to be an interesting sector to watch post recapitalization.
Exactly. Thank you so much, Mr. Kevin Kalufo, Chief Executive Officer of Star Advisory Limited, for your time and your views this afternoon.
It's a pleasure being here.
All right, let's take a break. When we come back, Aniti always cooks up something even when the market is closed. We'll see what he has cooked up for us after the break here on Business Incorporated. Please stay with us. Markets are closing a lot a lot of countries, but Aniti has some stories for us. So we have Aniti Edit now with the market segment. Aniti, good afternoon.
Yes, good afternoon, Nini. Well, like you said, only one African country, which we normally start our market analysis for intraday, which was the only country market that traded yesterday, the last day of March. And then at intraday, Johannesburg Stock Exchange, that's in South Africa, that's still the only country that is trading among its peers, the top peers that we track here. So, all right, so let's get straight to that number and take a look at first, like we started, we can't do without mentioning our markets here in Nigeria, the all-share index of the Nigerian Exchange Limited. This is the last time that we saw the markets trading numbers 0.23% but they didn't go well for the month of March. 0.8 was down by about 2%. But talking about intraday market numbers for the major markets around the African continent, this was the only market trading, and guess what? It has crossed back into the 90,000 level, which is sometime on the 20th of March. It had reached this number and was about to go higher, but made some pullback, no thanks to the impact of some sell pressure and some other factors that are relating to the market. But just at intraday, this market 1.64%. That's quite higher than that's more than 1.5% in the green, and we're looking out for that market going further into the 90,000 index level, which it has just achieved for the start of April. And for the other markets, we see that it was still in the green for most of the market across EGX. That's for the EGX 30 of Egypt, and the Nairobi Stock Exchange All-Share Index for Kenyan market. Okay, so now let's talk more about the trading for Nigeria. Nigeria stock market, it will be open for trading tomorrow, but this time we're taking our focus on consumer goods stocks. Well, most of the companies that are listed on the NGX are still reporting the full year 2024 earnings season. Yes, we've done and dusted with the Q1, but the Q1 results are expected to be released sometime later in this new month of April and towards the tail end. So we can't talk more about that. We'd only be looking at the FY 2024 numbers, particularly from some key components of that. We have Boa Foods, which released its full year results. We also have Unilever, we have PZ Cussons, and we can also talk more about Nestle for their performance within the first quarter, within the full year of 2024. But to give us details about that, let's bring in Nathaniel Disu. He's an investment research analyst with Afrinvest West Africa.
Hello, Anita.
Yeah, nice to see you here.
Yeah, good to be back again.
Yeah, I would say Happy New Year, because the last time I saw you was sometime last year.
Last year.
Okay. So now let me start first with it's a behemoth among the Boa group. We have Boa Cement, but this time we're talking about Boa Foods, which reported very, very impressive record-breaking results in its 2024 financial performance. I know that the revenue, it was up by about more than 109% at about 1.53 trillion naira. Quite huge. What was attributed to this in spite of the food crisis that we have in Nigeria, the seeming food crisis that we have in Nigeria? Okay,
yeah, like you said, Boa Foods reported 1.5 trillion naira as in their revenue, and that's the first time that this company would record that will cross the 1 trillion naira mark in terms of the revenue. And one of the two major components that make up Boa Foods is the sugar segment and the flour segment, and these are the major drivers in revenue. Like the sugar segment, one of the interesting things about there is that for the past couple of years, Boa Foods, in terms of the sugar segment, they've been kind of battling with the Dangote sugar in terms of who will become the market leader. But from the data that we have now, we've seen that Boa Foods has now become the new market leader in terms of revenue generated. And one of the key things that Boa is doing in terms of driving up revenue, especially for the sugar segment, is focusing more on the B2B segment. If you look at the sugar components in terms of the wholesale part and also in terms of the retail part, you can see that retail part is kind of getting more traction in terms of both. So that's why the fact that they're still focusing on the B2C market, they're also optimizing the B2B market, and that's one of the things that is driving up revenue. And also another thing that drove up revenue is that Boa Foods is kind of, when we talk about football would always say that attack is the best form of defense. So despite the fact that the macroeconomic dynamics is still affecting Boa and other consumer goods, Boa is increasing more in terms of marketing. If you look at their numbers, in 2023 full year, they spent about 30 billion naira in terms of marketing, selling, distribution. But in 2024, they spent 40 billion. So they are kind of being more aggressive in terms of their marketing, in terms of their distribution, and it's no surprise that we're seeing it play out in their revenue.
So besides revenue, gross profit was up by 107.9%.
Yeah.
Profit after tax also very impressive, 145.3%, while earnings per share also climbed by about 145.3%. And I know that the company has also announced dividend payments. Yeah. That's for Boa Food. So let's talk about another consumer goods behemoth. Yeah. Now let's analyze Unilever earnings.
So Unilever, one of the things, Unilever is one of the companies that has been kind of stable in the past year, despite the fact that the major macroeconomic challenges in terms of FX crisis. Boa Foods, Unilever has not really been that affected, and that's one of the reasons why is that they are using more of local sourcing of their raw materials. 100% of their raw materials is locally sourced, so that's helping to optimize that. And also, in late 2023, we see Unilever break off from the home care segment part of their business. So that has also helped to make their financials to be more stable. But one concerning thing about Unilever that we saw in their audited financials is that in terms of their operating profits, it's kind of declined. But if you look at the overall profit after tax, there was significant growth, and that is due to the losses that was incurred in the home care segment. So if we remove the finance cost part and we focus on the core business operation, we could see that Unilever is still a little bit struggling in terms of their operating profit. So that's one of the things that the company should look out for.
Okay, so now I'd like to talk more about some other, but I think you can add that to this question that I'll be giving you. These are consumer goods sector components, and when you look at the consumer goods sector components, or the consumer goods sector in particular, what would you say about their performance in the first quarter of this year?
So for the first quarter of this year, one of the things that we would be looking at closely in terms of, because if you look at long time ago in the past, consumer goods companies have not really struggled in terms of revenue. So despite the fact that the consumer wallet is declining, consumer goods company has always been doing well in terms of revenue generation. So they've never struggled. Where their main focus or where their challenges have become is in terms of cost of sales, raw material costs, and also FX challenges. And this has been one of the things that we would look at in terms of Q1 is their cost of sales, because based on the macroeconomic dynamics, inflation is already moderating, so that could also play out in their cost of sales. So we're expecting that we would see a kind of moderation in their cost of sales for general consumer goods companies.
Yeah. Well, Nathaniel, I think I'll have to let you go. We can spend much time talking about many of the components and the impact, but now I think we'll go with your analysis and also look out to how they would perform in the second quarter, because they've done and dusted with the first quarter. But thank you so much for your analysis on the show, and get to see you next time.
Yeah, thank you very much, Anita. Yeah.
That's Nathaniel Disu, investment research analyst with AfriInvest West Africa, talking about the consumer goods components. All of you investors here, if you like to, there's quite a number of sectors that you can invest in, not just the banks, not just industrials, not just the insurance, quite a potpourri, and that's on the Nigerian Stock Exchange, Nigerian Stock Exchange, if you want to be a local player, which have the dominance on the market. So that's it for the markets on the African continent. Now let's talk about the markets in the United States. We would have talked about the Middle East. The markets there are still on holiday, Eid al-Fitr, so they're still relishing that holiday, and they get to begin their first trading day for April and for the second quarter tomorrow. But take a look at this is what you call the pre-market opening numbers for the U.S. market, all in the red. And this is because the concerns over U.S. President Donald Trump's Mr. Tariff, like I would call him, I don't know what others would call him, because his tariff has made others to begin to go for a tariff tit for tat, even in Africa here, where we have the countries, the former ECOWAS countries, that's Mali, Niger, and Burkina Faso, also saying that, okay, they're going to impose 0.5% tariff on their former counterparts in ECOWAS, and there's the expectation that there will be a counter tariff for that. So, but the impact of tariff announced by U.S. President Donald Trump is what is causing the declines that you see across the Dow Jones Industrial Average, the S&P 500, and the NASDAQ, all in the red. Now, that is expected to begin with effect from tomorrow, as promised by U.S. President Donald Trump. So the markets are really bracing up for that and being in the red. So that's Donald Trump is expected to announce to unveil a reciprocal tariff on the goods virtually from all countries. Investors are hoping for a narrow approach into administering these levies. So at the same time, the market will also be expecting quite a number of some reports. First, we have the ISM Manufacturing Index for March alongside the February jobs opening and the construction spending report. But for an overview of how the markets closed for Monday, let's bring in Maria Bird, our Washington correspondent.
The U.S. stock market rallied on Monday after what many consider a challenging first quarter of 2025. As the Dow Jones was up at 1%, the S&P 500 slightly up at 0.6%, and the heavy-tech NASDAQ just couldn't pull up on the day as it closed slightly down at 0.1% down. Many investors are watching to see what will happen over the next few days ahead, especially as we enter the second quarter. There is much hope that interest rates will remain to be down and that there will not be any increases in the near future, and that the U.S. stock market will find a way to rally through the second quarter heading into the half mark of the year.
Washington correspondent Maria Bird giving us an overview highlight of the closing performance for stocks on Wall Street for Monday. Okay, so now final stop is Asia. We see Asian markets well, mostly in the green, except for the Hang Seng Index, which made a 0.38% pullback for the close of Tuesday's trading session. Now we see these countries, Japan, South Korea, and China have announced that they plan to bolster regional trade among the three countries. These leading economic powerhouses across the Asian region. These are among the top countries, top 10 industrialized countries. So they've announced that they're going to be partnering in order to counter that the impact of that tariff announcement by U.S. President Donald Trump coming into effect on Wednesday. So that impact, you see the Nikkei trying to make some gains after losing on Tuesday. So it was up by a tad, 0.02%. The Kospi, well, that was one of the biggest gainers there, 1.62%, and has been able to come up into the 2005-1 index level for the market. But the Hang Seng Index was not too smiley for that market. It was down, as we earlier mentioned, 0.38%. The impact of that tariff announcement were to the chip makers, automakers, and some others, which that tariff is going to impact them, and they're not among the tripartite agreement there. So for the other two markets that we see, the Shanghai Index and the Nifty 50, well, the Nifty 50 is down so far 1.83%, making negative close for Tuesday's trading session. So, Ini, that's a wrap for the markets.
All right, Sanita, thank you so much for
Pleasure.
that. All right, let's head to Berlin now. Yesterday, we had this conversation, well, the UK version of it with our correspondent, Juliana Olayinka, obviously, but now it concerns the EU travelers. So from tomorrow, Wednesday, Europeans traveling to the UK need to get a permit. So we talked about all of that with Juliana yesterday. Today, let's see it from the European part, and we have Chiponda Chimbelu now telling us the sentiment around this new change from the Europe side of it. Hi, Chip. So from tomorrow, Europeans would need permits to get into the UK. I wonder what conversations you're hearing about this.
Ini, thanks for having me. Well, yeah, basically, of course, as you mentioned, they are citizens from the EU and a few other European countries. They didn't have to complete an electronic travel authorization before entering the UK, but that will change as of tomorrow. And so even for short visits, for tourism or business, that will mean that an ETA will be required, and it will cost around £10, which is actually around 12 euros. Ini, and of course, someone like myself who has been used to traveling to the UK without having to think about the extra paperwork, that is quite a bit of a change, because of course it's not just about me getting my plane ticket or train ticket, it's also about having to fill in this extra piece of work, paperwork, and of course people aren't too happy about that. But I think it's fair to say that people are used to doing this, because of course the US also has a fairly similar system, and also European travelers to Canada have had to do that as well. So there is, of course, not a lot of happiness about the new system, but of course the EU, the Brits are out of the European Union, and that's been, of course, 5 years or so since they left the European Union, 2020, and so this is a change that, of course, doesn't make Europeans too happy, but it's just part of the way things are right now, and we just have to deal with it like everyone else has had to deal with
Yes,
anyway, the ETA.
I guess it's the new normal. You know, I spoke to my colleague in London yesterday, and I asked, so because she said it's about security, protecting the borders, and I'm like, so what about the fees? Is that also necessary? I mean, as you noted, you have to calculate that into your travel expenses now, but she says it's something you can overlook. So you tell me, from the European point of view, the fees doesn't matter, the paperwork you can handle.
Well, I mean, the fee, of course, is something that also we might see at some point also on the European side of things. They also might have a similar system deployed in Europe at some point. Now, they haven't done that yet because I think some airports across the European Union weren't quite ready to deploy such systems. So maybe this is something that we may see rolling out in other places in the European Union going forward. And of course, they may also charge fees as well. I think governments might actually see this as a means of raising, some money. And of course, it's also fair to say that just because you have that ETA doesn't mean that you necessarily get into the country. So it's not a visa. It's just basically to show that you can enter the country and you have your right to be there for this period of time that you're traveling. So it is a way of raising money. I think it's fair to say this is sort of a tax on people traveling to these countries, but the fee is not high enough for people who travel to the UK to complain about, because of course plane tickets or train tickets are much more expensive, and anyone who can afford to spend on that should be able to afford the extra 12 euros that this will cost. So it's not it's just the hassle of dealing with this. It's an extra thing to think about, and that's what makes people a little bit irritated by the whole thing.
Makes you feel less special. You're not like us. When we want to go there, we have to go through the hassles also, unfortunately, Chip. But let's look at the markets now. How are the stocks doing intraday?
Well, European shares are rebounding after that sell-off on Monday, and all the major sectors are advancing today, but they haven't quite regained all of the losses from the trading session yesterday, and the Euro Stoxx 600 is actually up 1%, and it shed 1.5% yesterday, because of course investors remain cautious ahead of the impending announcement on those reciprocal tariffs from the United States. Now, Europe's benchmark Euro Stoxx 600, of course, is down 5% since its record high in early March. And of course, that is something that came after much optimism following Germany's big spending plan announcement. But of course, now it's clear that the focus on the markets has shifted to those tariffs. And here in Europe, there is, of course, some positive news, and that is the latest economic data, which shows that Eurozone inflation fell to 2.2% in March, and that is only 0.2% higher than the ECB's target inflation. So there are expectations, Ini, that the European Central Bank will hold interest rates this month. So that is maybe positive news to look at, but of course we won't know what's happening until those tariffs are announced tomorrow.
And that's tomorrow. That's just a couple of hours, Chip. I wonder what the world is going to look like, the markets and all, but God's grace will be here tomorrow, and we'll see what the numbers look like.
Yeah, looking forward to that, Ini.
Yeah, thank you. So let's come to Africa, where the Bank of Zambia has unveiled a new series of banknotes and coins, introducing them into circulation as legal tender. The new currency family consists of 6 banknotes. There's the K500, K200, K100, K50, K20, and K10. 6 coins of K5, K2, K150. And also the Minister of Finance and National Planning said that at the launch in the Zambian capital, Lusaka, that the banknotes and coins reflect the country's deep connection to the land and celebrate the unique flora and fauna that flourish, as well as the awe-inspiring waterfalls that showcase the natural beauty of Zambia. Then we move to West Africa, Ghana. Ghana's mobile money sector has recorded a surge in the first 2 months of 2025, reaching a total transaction value of 649.2 billion Ghanaian cedi. This is according to data from the Bank of Ghana. This marks a 64.68% year-on-year increase, reflecting the rapid adoption of digital financial services across the country. And from there to Ethiopia, where the National Bank of Ethiopia has announced the launch of bi-weekly foreign exchange auctions. According to the central bank statement, this decision aims to allocate a portion of the foreign exchange accumulated at the NBE to the private sector. The auctions will continue at least until the end of the current fiscal year. And in Kenya, the country's electricity import surged by 79.41% in the first half of 2024-2025 financial year, hitting 751.95 gigawatts compared to 419.13 gigawatts in the same period last year. And this despite increase in local electricity generation. According to the biannual Energy and Petroleum Statistics report by the Energy and Petroleum Regulatory Authority, the significant rise in imports is attributed to the full commercial operation of electricity imports from Ethiopia and the commencement of energy exchange with Tanzania. Let's go to the crypto space now and see what's happening there. Hacks are in the news, but I think more importantly, the color has turned green, at least for this afternoon. Not so different from the number we had yesterday about this time, but at least it is green. So in the last 24 hours, we've seen an increase of 1.65% on the price of Bitcoin. And that has spread to the altcoins also, from Ethereum to XRP to Ton to Leo. I mean, most of them, Solana, Cardano. Well, been a while since we saw this green. I wonder if we should celebrate this. I'll ask our guests in a bit. But first, let's see the headlines of what's happening. The opening quarter of 2025 has seen an increase in hawks of crypto. It has hit $1.6 billion in the first quarter only. Wow, that's 131% growth from what it was at 706 billion has been lost. That was in the first quarter of 2024. Now it's gone up in the first quarter of 2025. Also, Australia is cracking down on, they're concerned about crypto ATM providers, that they may lack adequate anti-money laundering and counter-terrorism measures. So, of course, this will also contribute to some of those uncertainty and concerns in the crypto world. And then there's XRP has been on a consistent downtrend in recent days, in its price falling sharply. That is what we have seen. But let's talk about these and a whole lot more now with a guest, Segun Kosemani. He is the Chief Executive Officer of Bot.me Cash. Hi, Segun. Good afternoon. Welcome to the program.
Good afternoon, top lady. How are you doing?
Doing good. So I know, I mean, you guys in the crypto space, I don't think you've gotten through the euphoria of the new ISA, the recognition of crypto among other digital assets, and you're celebrating, especially being in a holiday mood.
I mean, for me, I would like to say that huge congratulations to Nigeria. Dr. Timi Agama, the top boss of the SEC, a visionary leader, and his steadfast team at the SEC have done very well. Without him at the helm of affairs, of course, giving the fair play to operate by the President of the Federal Republic of Nigeria, we may not be here having this conversation today. So new multi-millionaires and billionaires will be born. New jobs will be created, human capacity will be developed, Nigeria will be getting another positive PR, just like Afrobeat is doing us well and sports did us well many years back. So yeah, a good one overall.
Well, I can't help the smile on the face of you crypto guys these days. It's just so much, and I wish you the very best. But in spite of all this, we see that the issue of hacks is also seems to be growing. For instance, we see this first quarter, it hit $1.6 billion. These are the things that would discourage individuals from coming onto your community.
Discourage should not be the word. Undermining the Bitcoin and, of course, everything that got birthed under it, of course, because Bitcoin is the blockchain, so Web3 and every other thing is under it. Undermining it is at that individual or entity's peril. The best performing asset on earth today is Bitcoin, performing way better than gold.
Is that an objective perspective, or because
it's meant
because you're part of this community? Can we? I mean, gold is doing very well. Gold is doing very well.
Since 2009, where Bitcoin starting value was at 0.008 cents for its first trade, till today, cumulative return of Bitcoin is about 11.749 million %, compared to gold of 120%, right? So even the US Treasury bond is performing woefully against Bitcoin. S&P 500 have only done maximum of 450% in the last 16 years. Nothing on earth, I repeat, if Nigeria takes just 1% of our foreign reserve and we buy Bitcoin, we would be performing way better than we have ever performed in the last 10 years. And thank God to the ISA 2005 signed by President Bola Ahmed Tinubu, it is now legitimate for you to play in this sector. Bad actors will be pruned away, and the right people, whether you have braided hair like me or you're not tied like the guys at the bank, will now come forward. All is to increase Nigeria's GDP and to better Nigerian people's life at the end of the day.
All right, Shegun, I feel your passion. I feel your passion, and of course, we'll stay on this. And we wish you the very best. Your excitement will not dim out. Thank you so much, Shegun Kosemani, Chief Executive Officer of Botme Cash, for your views.
I truly appreciate you. And one last thing, Nigerians should respect the ISA, treat Bitcoin as SEC has now said it is, although we plead with the SEC to, maybe in a couple of months, maybe add, the value of Bitcoin, which is a commodity, to it, so that it can be a security and a commodity, since you can spend it like currency. But overall, we now have a new opportunity to play. So Central Bank, come and partner with the young creative business in Nigeria.
Shegun Oliver Twist, that's what you're doing. Well, thank you so much for your time on the program. And that's it on the program. Thank you so much for being a part of Business Incorporated today. Holiday's over for you, so you're back to work tomorrow. But I'll be here, God's grace. I'll be here again from 10 a.m., 1 p.m., and also do the stock market reports. We have a full day tomorrow. Let's get to work and make some money. Bye-bye.